here. Kirk, how are you doing today?
I'm hanging in there. Can you hear me?
I can hear you fine.
The office that I'm doing laundry in.
Yeah, I love
put
it.
up a virtual background and it's not working.
Uh-oh. If you hit the settings, it should come on there.
That's okay. Yeah, I'm in a messy room. That's life.
That's okay. So, Kirk, thank you so much for joining Quasar. I know you've been a long-time friend of Mr. Big Beat himself, Stephen Orr. Tell us a little bit what you do over at Fundamental Trends.
All right. Well, I actually own an investment firm, that little boutique investment firm, managing 8 figures. The concepts that I follow are pretty simple. I just invest in the big secular trends. I started out as an energy and a technology analyst a long time ago, 30 years now, and became a quant before it was cool. Had a guy teach me Elliott Wave, and that seems to work sometimes. But I'm really looking for, 2 different things. I'm looking for stocks with huge asymmetric upside, and then I'm looking for the ones that I grind out where you can triple your money in 5 or 6 years. So it's a combination of catalysts in the big secular trends, and there's a process, which is big secular trends, analyze the government and Fed policies, which is important today, the fundamentals of industries and companies, and then finally technical and quantitative overlay. It seems to have worked. We've got about depends on what the volatility is on a given day, but we're at the edge of having 25 10 baggers since 2009.
That is amazing. That is absolutely amazing. Are you finding right now, are you trading any differently here with all of the tariff talk and the tweet analysis being almost as important as technical analysis these days?
So interestingly, yes. I think that the rise of the new retail traders is very similar to 1999, except magnified, right? It's bigger. And the communications are so much better now that the coordination, which if it were guys like us would be called manipulation, is off the charts. So I actually have an article that I'm going to release soon titled Naked Shorts and Nefarious Underlords. And what's going on here, and if you troll the Discord rooms, it quickly becomes apparent to you what's happening is small hedge funds, maybe big hedge funds, but I know the small ones, they have their little monthly breakfasts or their lunches or their happy hours or their dinners where they share ideas. And so they take their positions and then they give their ideas to guys in chat rooms and trading rooms and Discord rooms, and they let those narratives grow. And they're clearly trying to manipulate the direction of stocks either up or down. And on micro
Are you trying to say they're trying to make Wall Street bets into their exit liquidity? I can't believe that someone like Ken Griffin would do that.
Right. I mean, I don't know if it's Ken Griffin. He has more legal ways.
He has a lot of other stuff to do, but I'm just joking.
He can cheat by running the market with supercomputers.
Right.
But yeah, I am a definitely, I was raised in a way where you had to have a good bullshit detector, and I'm Sicilian, so you can understand that I think about words called skim. And I think there's a lot of skim in these markets, and I just think that you have to pay attention to the narratives to understand what the next narrative will be. Because you try to catch up to this narrative, it's usually too late, right? You can if you can outgun everybody else, then fine. But we know that only 10% of the people get all the excess gains.
Right.
What you're really looking for is the next thing. So what's the next narrative that's going to come out? And I'm telling you, in a few hours, the narrative is going to shift, and it's going to be sell freaking everything. And I think that if you take a look at the charts, you take a look at Netflix, you take a look at Meta, you take a look at chart after chart after chart, they're going to all do what Tesla did. That I mean, maybe not to that extreme, maybe not 50%, but you're going to see 20 and 30% corrections. They're going to be elevator shafts. And I think it's going to be next 2, 3, 4 months, you're going to see a lot of blood. Then you'll probably get a really good rebound rally, and then the year will finish with blood. On the quantitative side, what supports that is that global M2 liquidity has been choppy for a few years now, since the Fed started tightening. And you got some of the international governments and central banks that have been loosening, but they're not as big as the Fed. So until the Fed is done with quantitative tightening, there's going to be problems. So you were able to pull this up. So people want to talk about, M2 is going up. I'm like, no, take a look at the last 2 years.
Out. Yeah,
it's kind of a straight line. And with the U.S. government, and I'm a macro guy. That's actually how I got into, that's how Rupert Murdoch's company, the little place called Wall Street Journal, hired me.
Yeah, just a little company.
Yeah. And I could tell you all kinds of things about that. And you can see the lotions back there. You can see the spray. My book list is actually pretty good. I got laundry to fold behind me. It is remarkable that people don't understand that liquidity is the number one, hands down, nothing else is close, driver of asset prices. So when liquidity is going up, asset prices tend to go up, and when liquidity is going down, asset prices tend to go down. If you show that chart, you can see that it looks like it's starting to inflect back to the downside, and that's probably because you're going to have a really hard time finding buyers for the U.S. debt this year and next year. So the idea that these trade wars are suddenly going to, rebalance things and get us through a transition, maybe in a year or two they do. I'm not going to make a comment because there are actually, I'm not a Trump guy, but there are definitely things that had to be fixed, right? I don't think anyone disagree with that. So in this particular era, we see the U.S. with the biggest debt refinancing we've ever had to do, over $6 trillion by the end of next year. And Janet Yellen was using the short-term debt because it didn't make sense to lock in the higher rates. Well, they're trying to get the 10-year rate down.
Yeah.
The only way you can do it is by having at least a recession scare. It doesn't necessarily have to be a recession, but it has to be a recession scare, and it has to last long enough that you can push some of this debt out to 5 and 10 years. You got Canada selling our debt suddenly as kind of a
right,
a Canuck FU. So you really, you're gonna have a hard time with this. So interest rates maybe don't go down the way they want them to. Maybe interest rates go up if they have a hard time placing all that debt.
Yeah, well, I mean, we've been tracking the 10-year here. We got down as low as 4.123 before the big tariff word got brought up. We can see it's pushing back to 4.3. Bassett said, that he's going to control that, not that, Jerome Powell. I don't know that he has the levers to make it happen. Like you said, the refinancing of our debt is only going to get worse, right? Fitch just gave us a downgrade. That isn't going to help, And as you mentioned, we're not making many fans throughout the world that necessarily want to bail us out, so to speak, and buy our debt.
No. So what's the only solution? There's only one solution.
Print more money.
That's right. We have to end quantitative tightening probably this year. And by next year, we probably have to do quantitative easing. I said that last year on the show that on Stockholm Spaces. I wasn't sure if you want me to plug them or not. But and I got pushback. There's no way that we have a potential deep recession. No way that we, there's one particular guy. We're so far away from that and blah, blah, blah. And I'm like, look, man, I've been a macro analyst a long time. I got people paying me a lot of money per hour to talk to me. I have a clue. I might not always be right. And my timelines might not always be perfect, but I got a clue. And I think that we probably have quantitative easing next year. So between now and then, you got to have an event, right? You got to have that crisis. And the crisis is going to be a debt crisis. And it probably, it's not 2008 all over again. It's going to be less than that. But it's going to be enough to trigger the next Fed chairman next May is going to probably do QE. And I'm certain that when Trump hires the next Fed chairman, they'll have that talk before he takes office, right?
Oh yeah, without a doubt there. And I think, you just hit on a couple of key points. We've seen it. Number one, we've seen it from Jamie Dimon, right? He talked about it. He made it clear 2 years ago when everybody else was sort of ahead, calling for the big R word. He said, right now, people have a lot of money in their savings. They're at all-time highs, so we're okay. And then he came out like 4 months ago and said, guess what? Credit card debt now at all-time highs. Bank accounts down at low levels. Now we're in trouble. And like you're saying, it was when nobody else was talking about it. I think that's the point. I did notice Bank of America's CEO was on today talking about how, they have about they're seeing a 6% spending level increase across their, bank accounts, debit holders and credit card holders. But my question is, where is it going? Because every earnings report we're seeing in general has had negative sales impact.
Yeah. So revenues really have kind of flattened out, right? So, the only thing they can do is increase margins by using AI. Well, if the executives, to save their bonuses, decide to start firing people by using AI, right? I mean, I think there's a crisis coming in that too. I think that, I did an interview with a Canadian, actually he's not Canadian, but he's based in Toronto, University of Toronto, who wrote an article called "The Singularity is Coming Sooner Than You Expect," something like that.
Yep.
And I believe that AI, depending on how we utilize it, can be a major positive for life, but the greedy people might have us use it the wrong way to start, and then we'll have to adjust. So I think the Europeans are actually on the right track here. We have to decide, are we going to keep jobs? Because do you really want idle hands? And the thing is that we really just got to push people back in the services, because we're short on healthcare. We're short on all sorts of things. We have to reposition. We got to match up the jobs, and the skills. Our education system is beat to shit. I don't know if that's a lot on this show.
Yeah, absolutely.
So, this transition, I don't think it's a 1 year thing. I think it's 5 or 10 years, and we're going to have to figure it out. We probably take our lumps. I do think that the fire investors, right, your SPY indexers, I think they're in trouble. I think that they're going to see
what we've called for.
I don't see them doubling their money in the next 5, 6, 7 years. I think maybe they're in the same place in 5, 6, 7 years. So
what are your thoughts too about the advent of the zero DTEs? I mean, last week was just insane with the amount of them on the SPY. And my concern is that the average investor is buying naked calls or puts when that isn't how they should be used.
Yeah, I wear this hat because I play poker. I play in the World Series of Poker, and I'm not good at it. I'm good enough to bring the money from the Milwaukee amateurs and give it to the Las Vegas.
I give it to the other pros. Okay.
Yeah. I'm a good enough amateur that I'm a courier. I'm a money donkey. So the gambling that's going on in the markets right now, and you can see it in all the betting markets that are out there now. I mean, hey, our interest rates going to go up by a quarter point or zero, or are they going to drop on a quarter point? I mean, there's people betting on all this stuff, and presidential elections, and will Kim Kardashian blow up the internet again this year? There's just so many stupid bets out there that it's a gambling mentality. Well, I've been going to casinos for 30 years. I have an uncle that worked at the Riviera for 35 years. He taught me how to play poker and gamble. And I'm going to tell you something. You can't beat the house.
No, so, they don't have those beautiful towers for no reason.
Yeah. I mean, you only have to bust out once to be busted, right? So you're going to see a lot of these gamblers just get blown up. And then they're going to point, it was their fault. They did it. They broke it. Nah, you were gambling, man. You know, it's
Right.
like
Market has no emotion, right? Is that we've put it, everyone thinks that this market has emotion and everything else, and they're there to break the little guy. They don't
right,
care.
right.
Yeah, the
It's like
market
playing,
makers making their money on spread.
yeah.
You
Well,
know,
and it's like going to the blackjack table. Oh, I can count these cards. I can figure it out. And now they're using 6 shoes and they're only playing 6 to 5 on blackjack. And the dealer gets 21 4 times in a row as you're steaming it and building up your bet. And you lose 4 giant bets, and you're like, oh, I'm out of money. I guess I have to go to the ATM. Oh, the ATM's empty today. Look, there's so much gambling out there that there is a comeuppance for a lot of people coming. And when it happens, they're going to point and they're going to scream and they're going to say it was somebody else's fault. It wasn't. It was their fault.
I mean, we scream about it here every day, all day. That's why we bring on so many professionals like yourself to talk to retail traders and say, listen, this is what you should be doing. This is how you should approach the market right now. This is why, the same thing, the perma bulls, right? Perma bulls are getting killed right now. Yep. They're buying every dip, and every type of move to the upside right now is sold off pretty quickly.
Yeah. I came into the year neutral to bearish, and I got berated for that 2 months ago. And it seems to be working out for me, right? Because I flipped from neutral to bearish. I bought puts on the S&P 500. I think I don't know what the market's even doing today. I've been on shows all day. But yeah, I think
it's up slightly. SPY's up about 62 basis points.
Yeah. So I've doubled my money on my puts, and I'm holding them because I think that after Powell today I think we get a pivot to the downside. I mean, I'd be shocked if he surprises us with a supportive message. I think he's going to say, look, inflation still needs work. Unemployment hasn't gone up enough for us to care. And, there's enough cash deals in the building space that, anything that we need for building houses has to come from Congress. I mean, he won't say it that way, but he did talk about.
Yeah, he'll hit that word uncertainty, right? And that's what spooks the market.
Yeah, and he talked about housing last time. He said, look, there's less activity, and that's probably because of us. He even said it. He said it out loud. My side hustle, because, everybody's got a side hustle. I happen to work with a private equity firm on the side as an advisor, and I raise money for them. And I'll tell you what, we've had projects on hold for a year and a half, almost 2 years now, because interest rates are too high. If you're not doing cash deals, you're not doing deals because you can't raise money from investors at a 12% internal rate of return. They look for 15 to 20. So until those interest rates, the 5-year note is what we care about. Until the 5-year note is in the threes, like the middle threes, you can't get a good enough internal rate of return to get investors. And, Kamala talked about giving people money to buy houses. It's actually the wrong solution. The right solution is have a tax credit to build houses.
Absolutely.
So we'll see. Trump maybe comes up with that one. I really think that you're going to see a heck of a shock to this market sometime this year. I don't know if it looks like 2022, where it just kind of drifts down here, or if it ends up being a correction, a rebound, and then a big correction like 2018. I don't know. I don't see 2008. I just think there's too much leftover money in the world from COVID. I worry about 2030-ish when we're at max boomers on Social Security and Medicare. I mean, Musk is right that we have to deal with that. But if you get rid of Medicare and Social Security, then you just have, 60% of the people impoverished for the last 30 years of their life. So you can't do it that way. You got to fix the systems, not break them. So, we'll see. The one charts that I've been giving people that I think that you should take a look at is, and you can pull up QClean, QCLN, or iClean, ICLN, or even PBW. All of these clean energy charts are just destroyed over the last 3 years, 2, 3, 4, 5, since the peak in 2021. So the last 3 years. And they're all bottoming. So when charts get this beat to heck, I think there's one question to ask. How will these companies all be out of business in 5 years, or will they have been rebounding? I think that all of these clean energy plays, if you buy the ETFs, it's probably the safest way to go. I think they'll beat the S&P 500 handily over the next 5 years. Handily. They'll crush the S&P 500 in the next 5 years. We have such, and this is how I got into the Wall Street Journal as an energy analyst. The demand for energy is going up. So we
Huge.
we had flat energy demand for a decade. I don't think people really understand that. We had flat energy demand for a decade because efficiency offset
better.
Offset everything, right? So now suddenly we have the AI data centers, which if you listened to Jensen yesterday,
I did.
the day before, he's telling you, look, the demand for compute isn't going down anytime soon. And
no, I mean, we're all going to have supercomputers, as he's pointed out. When Rubin Ultra comes out, you'll be able for $3,000 to run your own AI supercomputer. So I agree. Now, would you think that a big component of this too will be that surge in nuclear energy that we'll see also? It might change where it comes from, or you don't care?
That's so far out into the future. First of all, NIMBY will never die. Nobody wants, and they don't care if it's smaller. If it's next door to them, they don't want it.
Right.
And I don't really blame them. The most efficient energy out there is clearly solar on a cost basis. We already know that it's as cheap as coal during the day, and really even with batteries, it's as cheap as natural gas. The battery technology is getting so good so fast. And remember, AI is helping this because they figure out new chemistries, and there's a new architecture out there. People don't think about the architecture of batteries, but really just the way the battery is shaped was a big deal. A company called ENVX, it's a TJ Rogers company. I've been piling into that one. I think that stock's going to be a 5-bagger, maybe a 10-bagger from here. So
what was the ticker on that one?
ENVX. If anybody knows TJ Rogers, he's the guy that basically propelled Enphase.
Yep.
I think that this stock, people look at it.
Good looking bottoming right here. You can see. I mean, I have the weekly up. This goes back to 2022. The levels here. Yeah. You've got great support every time.
The fundamental story here is this: they created a new architecture for batteries that instead of a coiled lithium battery, it's more of chambers, and it decreases the potential for a burn or an explosion by like 98%. So suddenly you have batteries that don't burn, and they're 30 to 50% better than the existing batteries. Plus, they can incorporate new chemistry. So you got architecture and chemistry and batteries, and they figured out the architecture. They're in Malaysia, and they're in that new special industrial zone that Malaysia created a tax incentive, so they don't pay taxes, and they can license their technology out to the American companies to get around tariffs. So rather than building a plant here, they'll just go to Ford or GM or whoever and say, "Do you want to use our technology? Here, give us $500 a car, whatever." So this is a company that's going to see rapidly increasing revenues, low tax rates. Their CapEx isn't going to go through the roof because they don't have to build the plants. They'll just license out the technology.
Right.
Big deal. He has another company called Complete Solaria, CSLR. And they did something neat. You remember Sun Edison? Was it Sun Edison? Not Sun Edison. SunPower.
SunPower, yep.
SunPower went bankrupt, right?
Yep.
At one point, it was a $9 billion company. He bought it out of bankruptcy for like $45 million.
Oh, wow.
So this is the skeleton of SunPower trading at $100 million, and it's probably at least $1 billion company as soon as everything's running, and they're close. I think they're profitable next year. So they're going to be in the oligopoly of solar installers, and they're focusing on residential, commercial, which I think is the near term, residential long term, but commercial near term, and then some utility. If you take a look at where solar has been taken off, it really has been utility and commercial, right. Because if you have a big flat building, why wouldn't you put solar on the top and not have to pay energy expenses for 10 hours a day?
Here in Ohio, we've seen a few of the places put their employee parking under solar panels.
Yeah, that's a big deal. That's happening anywhere. It happens in Michigan and Wisconsin. If it happens in Michigan and Wisconsin, then for sure it's happening south.
It's happening in Ohio. That's how I feel. I'm like, if it's happening near Dayton, Ohio, it's happening everywhere.
Is that where you are?
Although I will say, well, I'm half in Dayton, Ohio, half in Washington, D.C., so I travel back and forth. So there's not much of that in D.C. because there's no room for it, and we don't have parking, above ground parking. But like you said, all the buildings have it. Although what does is National Stadium, actually, on top of both of the garage buildings there, Lerner put solar. So
cool.
I'm with you. My last question for you, sort of staying on that then, would be, what are you feeling about with the American car dealers who have sort of stepped back from their, push into EV over the last 6 months, 8 months?
Did you know that I was bullish on Ford, or did you just pull that up?
I just pulled it up because it's my favorite out of the car companies, personally, out of the U.S. base.
Then we're aligned on this one. So I think that Jim Farley is a better CEO than Elon Musk. And I know that the fanboys will hate me for that, but Farley's just a more stable dude, and they're just as smart as each other. So here's the deal with Ford. When the tax incentives for EVs were there, and they're not technically gone yet, but you expect them to be gone with the reconciliation bill. Right. It made sense for them to dive into EVs. Well, Farley went over to China and saw what was really going on. The car that they're using, and it's not a hybrid. People say, oh, it's a hybrid. No, it's not a hybrid. A hybrid has 2 propulsion systems. Right. The new car that's coming, and it's the most popular car in China, is the extended range EV. I have already pitched it to Farley, at least via Twitter or via X. I've said, look, don't call it an EREV. That's too much to say. Call it an EVX. Extra range. Yeah. And so I told them that I like the Explorer size vehicle. So, if they use EVX, that's all I want as a car. The extended range EVs are what's coming. It's going to be the most popular thing out there by far.
Big beats on that too. He has one of the BMW versions of that already. Yeah. And, not exactly that, but, right. And he's a big fan there. I will tell you, have you been watching what's happening with these Chinese EVs, the new Li? I've been watching a lot of these demos lately. They're doing a great job. I think Tesla's got some problems coming up in Europe and in overseas.
Aren't their sales already down 75%?
Oh, huge. They can't go much lower, I guess. But I guess I don't see the bounce back because, man, I wish I could get that Li $60,000 EV that they just showed over the weekend that they announced.
I said this, so I've owned Tesla since 2015. Okay, I owned Tesla a long time. We made a lot of money on it. At the end of 2021, I told people, look, you need to go short Tesla. And they said I was out of my mind. Well, I've shorted Tesla twice now in the last couple of years. I've only taken part in this short a little bit, not much. Because I just didn't know how irrational these people could be. But as it went down, I bought a couple puts. Here's the thing with Tesla, is that if every business they're in, they were the number one, it's a $1 to $2 trillion company, okay?
Right. Yeah.
They're not going to be number one in all those businesses. I don't even think they're going to be number one in cars. I think Ford is the one.
Yeah, I think space is the only one that they might, in Starlink right now.
But that's not Tesla. So, so you take a look at Ford at $10 a share and you go, okay, what's the deal there? Well, here's the deal. Great brand name, lots of loyal customers. You have the oldest car fleet in history right now that has to be replaced.
Absolutely.
There's going to be a cash for clunkers at some point when we have a recession. That somebody's going to do that. They're going to sell blowout numbers of cars at some point. You're really not going to see millions of immigrants get kicked out of the country. I mean, they're having a hard time catching the criminals. And the reality is we need that labor, right? We need that labor. So
I come from the restaurant world. You need that labor. No one else wants those jobs.
In construction, you need it everywhere. So we just need to find a way of giving out work visas that can become green cards, that can become citizenship over a 10-year period. If you stay out of trouble, pay your taxes and work. That's the way it's always been. And we just got to pick the number. Is it 2 million a year? Is it 3 million a year? Well, we have 3.5 million baby boomers retiring. So we need at least 3.5 million new workers every year, because the ones that were born here are just barely enough to keep up with the services and the educated jobs.
Absolutely. And they want to work less, not more.
And there's that. So, and the 4.5 day work week is for sure coming, if not the 3.5 day work week. I'm not really.
Yeah, I think we go to 4. I think we're going to be at 4 sooner than people realize too.
Yeah. I think people are going to take turns covering Friday.
Yeah, no, I'm with you. I fully believe that. Again, if you told me that 5 years ago, I would have said you're absolutely insane. But we just see it. They're just the generation younger than us, that they want it, and they're where my generation just said work more, work harder, and maybe we'll get out of there. I want it too now. I'm with them. I look at all the mistakes that we made. We stayed in the same job for 30 years. They jump jobs every 2 years, and they're making more money, and they're happier with what they're doing. And they've moved the labor market to where, they were in the driver's seat. Now it's sort of turned again a little bit there because of the economy, but that will always switch back.
Right. Hey, I spent 4 hours with the grandkids yesterday. I need a day off.
That will do it. I have a 4-year-old, so I'm the same way. I can.
You have a 4-year-old?
I do.
Oh, you're prolific.
Yeah. I started very late, and my wife is much younger, so
Okay.
All right. Yeah.
Well,
I don't want to monopolize your time. I am so happy that you joined us. We're going to beg you to come back because you've given so many great insights to retail traders here to explain to them that you have to have your head on a swivel right now. As you mentioned, I do want to pull up the charts for 1 second to echo what you said. If you look at all of these charts, NVIDIA is the only one that's not exactly there right now when you look at the daily. But most of them are sitting right at an important, liquidity zone or, support. NVIDIA a little bit in the middle, but, you look at Apple, you look at Tesla, you look at a lot of these. If they break below these levels here, if you get a break below 209, look out below. You've got 197 easy. Microsoft's another one. A lot of these are just consolidating these lower levels, and everybody is expecting this upward move. To me, I'd be careful. If it breaks through 381.31, you've got a lot of downside in Microsoft. A lot of these are set up for either way explosive moves.
Do you have a minute to take a look at Netflix?
Absolutely. Got it right here for you.
So I think that Netflix, and if you do a 5-year chart of that, it just really, I think it jumps out at people. I think that Netflix can fall off a cliff here. And just to explain,
look at that chart. As a Bitcoin guy, that looks like Bitcoin, and we all know what happens eventually.
Right. So my channel checks are my clients. So my boutique firm, you have to interest me for me to become a client of mine. So a couple of my clients are pretty big in the entertainment industry. One, actually has a brother who's a writer at Netflix, but I've got a guy who's a producer. And another guy who's an entertainment and communications lawyer, legit Philadelphia lawyer. And I talk about these companies a lot. So I understand the media industry. I've always followed it. Netflix last year did a documentary on how they're producing shows internationally.
Right.
And if you've listened to their last 2 conference calls, they've told you how hard it is to grow because you have to put in so much CapEx for the entertainment. Netflix's growth numbers are going to be very challenged now that everybody's been flipped to paying for their own plan, right? Yeah. I think that Netflix can drop down to between 700 and 500 pretty easy. I think 500 is the worst case scenario, but I think 700 is almost, I think 700-ish is
It's funny you say that because I was looking right at that sort of spot where it broke through, where it failed to break through, and then it finally consolidated and broke through here in September. And it's right there at like 695. So yeah. I see exactly what you're looking at. And I will tell you, I called it out on Schwab. The Tesla dropped the same way when everyone was buying up here at 420. I said, these were my target zones that have been there forever.
Yeah. My fundamental analysis of Tesla is that it's worth $140 to $165 a share. I don't know if we get there, and I don't know if we overshoot. But I think one side or the other of, say, 165 is where it bottoms, because I do think the other businesses have value. And I don't think Tesla goes away, but I don't think their volumes grow very much from here.
Right. And I think that they start to get judged as a car company, which they never have. And eventually that's going to happen as they see that across the globe, EV companies, they no longer have that huge lead and moat.
Right. The car company is worth $200 billion. So what is the taxis? Well, You got to remember, they're going to compete with Uber, who's going to buy that technology from Mobileye, and they're going to compete with Waymo, which is already there. Yeah. And even though you can say, well, this technology is better than that technology, the reality is that geofenced driving within cities, Waymo is going to be fine there. Now, do you want to drive a Waymo from downtown, pick a city, Milwaukee, out into farm country? Probably not, right? Because he's not going to know what to do when that cow walks into the road. But the reality is there's a lot of competition on that. The robotics, yes, I think there's going to be a lot of robots in the future, but I think there's a lot of competitors. You got Siemens, you got all these other companies out there, Rockwell, and they're going to have robots too. I went to the Consumer Electronics Show in 2020, and I only go to shows when I think there's an inflection point. So I went to CES in 2020, right before COVID, and there were some robots there that looked a lot like what Tesla shows now. Do you know who owned them? A little company called Ford. They're sitting there walking around doing, hey, we're robots, Yeah. So, they're not going to dominate any of these businesses. They're just in a bunch of competitive businesses. The AI, if you go to Sandbox AQ, what you realize is that large language models are almost programmed at this point. The next phase is large quantitative models. So if you use Perplexity or something and you use the reasoning setting, the reasoning is the next step, right? That's going to be applying data. That's what it's going to develop into, large quantitative models. And that's why Huang Jensen said yesterday, look, it's the demand for compute is not going down because you're going to have 100 times more people using this stuff in the future than use it now, because it's just going to be in everything.
Yeah, 300 million programmers alone, as he mentioned, and he said, and already NVIDIA's 100% are being supported by AI. I've been talking to a bunch of friends. I actually went to school for programming back when it was COBOL, Fortran, and assembly language. So useless unless you work for the U.S. government nowadays. The only ones who are using COBOL. But they've all talked about how the use of AI that they all use to do it is, even if it's just to find the break in the code to then go back and fix it.
Right. So if you think about spreadsheeting or any type of computing that you were doing, and you say, okay, I can do all this myself using traditional computer programs and calculations, and it's going to take me all day. Or you can write a very good query for the reasoning model on Perplexity or whatever you're using and say, okay, now I'm going to go and turn on my coffee and then go to the bathroom, then go back and get my coffee. And I'm going to come back and it's going to have an answer, right? Yep. So in those 2, 3, 4, 5 minutes, rather than you spending all day on it, you put in your query and it's going to give you maybe not the exact right answer you were looking for, but it's going to give you, okay, now I have to follow up this way. Or
absolutely, and it's going to prompt you to what maybe you do want to do next. Yeah. It's funny because you bring that up. As I was talking to one of these programmer friends who has kids getting ready to enter college, and he had been in the mindset of not letting them use AI very much. And I said, "You're making a mistake." And his thing was, well, that's sort of cheating. I said, no, it's just like when we used calculators in the old days. No one wanted us to have calculators to do it. And here's what I mean. Learning what that query, how to do it, is what is of the utmost importance right now, right? I use AI all the time, and the people who have the best queries get the best results from the AI.
Yeah,
and
absolutely.
They're going to be the case. So it's just going to be a matter of, it's going to be different. So you're right. We no longer write a summary of, whatever news event happens. We ask the correct query in the correct way and point it to the correct databases that we want it to act as a research assistant for us on, and it's going to give us that information. But the important part is going to be able to actually interact with it and to get the proper data out of it.
Yeah, I agree with you. I think what's coming is going to be mind-boggling to a lot of people.
Yeah, if I told you 20 years ago your phone would hold every song ever invented, what would you have said to me?
I would have said, wow.
Yeah, and it's free. You would have said to me first, well, how much am I going to have to pay for this?
Right. I still pay for Apple Music. I have to figure out how to download what I actually own.
There you go. Well, again, I thank you so much, Kirk. You brought so much great information to us. thanks again, and we will get you back here soon.
All right. I'll fix my background too.
Awesome.
Take care.